Hey guys, welcome back to another video. Today we'll be taking a look at Ford. So as always, starting off by looking at the PE ratio, it's currently at 3.68, which is always a good first sign as you want this to be at 20 or less. And seeing if they offer a dividend yield, they do. It's currently at a 2.45%, which comes out to about 10 cents per share. Getting into their income statement now, we're going to start off by looking at the revenue. So as in the most recent year, they're bringing in 136 billion, which is disappointing as it's down about 20 billion from 5 years ago. Now, seeing what their net income looks like. So, every year they've been getting worse except in 2021. It's cool to see them be on the right track again potentially, but I want there to be at least 3 years worth of consistent net income growth before I label this a good thing. Now, the last thing to look at on the income statement is the shares outstanding. So, this is something you want to see decrease. The more it goes up, the less your shares are worth. As you can see, it's basically just been staying the same, so let's hope for them to start buying back shares soon. Moving into the balance sheet now, we're going to check out the current assets and the current liabilities. So, the current asset growth does not look good as they brought this down to 109 billion, which is a decrease of 7% from 5 years ago. Now, with the current liabilities, on the other hand, as of 2021, they're at 90 billion, which is nice as they have 19 billion more current assets than current liabilities. The last and one of the most important aspects to look at in any company is the free cash flow. Cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to see be improved on year after year. And as you can see, there's nothing consistent here, and they're technically down from 2017, so this is not good. In conclusion, Ford has some really disappointing financials. The only good thing I was able to point out this entire time is that they have more assets and liabilities. They really need to improve on their income and cash flow statements as they're so vital in getting this company back on track going into the future. Two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I'm not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.